Hey guys, welcome to the last video in this section of the course. I hope you guys are already sniping trades, right? So basically in this video, we are going to combine everything that I've been teaching for Confluence um, and how you can snipe trades on a day-to-day basis using everything that I've taught so far. Right, so we are just gonna analyze this chart as I would do on a day-to-day basis to show you guys how I use everything for Confluence in the market to get the perfect entries. So this is Euro JPY, right? And as norm, right, what you want to do is you want to see the trend. Normally I go on the 4 hour time frame because I am an intraday trader, so I don't be on the weekly, the monthly, right? Because the 4 hour time frame zones can give me enough, like a 1 to 20, 1 to 30, 1 to 10, 1 to even 50, 1 to 100, right? It depends. I don't swing trade, so I don't need to be on the daily looking in, but it's obvious that this chart is in an uptrend, right? So as is, I would start from this low to analyze the chart because I am only interested in this structure right now on the 4 hour time frame, what this structure is doing, right? So we are going to be looking at from this area onwards. So the first thing you want to do, right, is you want to identify your 4 hour structure. So this is what I am seeing on the 4 hour time frame. Market creating higher highs and higher lows. Nice. So basically why I have this like this is because here when the market created this high, the market did not create a new high until this, right? So this is one impulsive move to the upside. So from a higher low to a higher high, right? So that is one impulsive move. So that means if you are trading this zone right here, when I say zone, I am talking about from this higher low to this higher high. It means that the 4 hour has all this area to play around with before it actually go up or it goes down, right? But you are not in a downtrend on the 4 hour time frame until the market break this higher low, and that is the 4 hour time frame, right? So let's say the market was here, right? So we would want to look for buys at for sells, sorry, at a 4 hour high, because we know that the market is supposed to create 4 hour higher low, right? But where will the market create that high? That is the question. In order to know where the market is creating that 4 hour high, we need to see what the lower time frame is doing. And normally I go from my 4 hour to my 1 hour chart to just see what is happening within that 4 hour zone, right? Within 4 hour structure. So what I mean by that is that this impulsive move right here, right, is 4 hour structure. So from this higher low to this high is 4 hour, right? So I need to go on the 1 hour time frame to see the structure within that 4 hour time frame, because I need to know when the 1 hour changes from an uptrend to a downtrend, so that I can know that, hey, this is where the 4 hour wants to create that high to push down to create that new higher low. Because remember, if we're in an uptrend on the 4 hour time frame, the market should create new highs and new higher lows. The market is creating a potential high here, so we need to be selling for the to where the market will create that new higher low, right? So when I go on my 1 hour time frame, this is what I am seeing, right? So from this structure here, the market push up, the market broke structure here, and this is the 1 hour. This is 1 hour structure we're talking about here, right? All right. Note here the market did not create a high. Right. The market failed to create a high, also failed to create a low. So basically, this is a complex pullback. Right. So this is when the market created that new high, and then new high low. The market created a new high. The market pushed down, failed to create a new low. So that means it created a high low, and then it also failed to create a new highs. The market came down, basically created equal lows right here, and then the market broke structure. Right. So at this point in time, when the market broke structure, it now confirms that the 1 hour time frame is now in a downtrend. Because we got that breaker structure. So now when we get this breaker structure, it confirms to me that the 4 hour time frame created its high here, and now it wants to sell to create that higher low, right? So now 1 hour is in a downtrend, and the 4 hour time frame is basically going down to create that new higher low to continue to the upside, right? So within this area now, I want to look for sells in the market, right? I want to look for sells because the 1 hour is in a downtrend, and the 4 hour is supposed to go down to create that new higher low, right? Now on the 4 hour time frame, we talked about discounted and premium price. So if the 4 hour is basically in an uptrend, I will be looking for the market to come back to at least equilibrium price, right? I would want the market to come back to at least equilibrium price before looking for buy opportunities again, right? That is what I would do. So the market can come all the way into premium price, right? I'm gonna show you guys how to know where exactly the market wants to retrace, and I showed you guys a ton load of methods that you can use to basically see when the market is changing trend, right? But we'll get to that. Now let's go back on the 1 hour time frame, because remember, we're looking for entries, we're looking for intraday entries, right? So we're selling within this 4 hour zone, right? So let me identify that zone. So we're selling within this zone right here, because we know that we need to create this higher low to continue the uptrend on the 4 hour time frame, right? I hope you guys understand what I'm saying so far, right? So this is what you call time frame correlation, right? So we're basically using the different time frames to to analyze the market, right? So on the 1 hour time frame, we see that the market broke structure and retested this sponsor this order block right here. So the market is now creating lower highs. Cool. So the market created this lower high right here, and then it broke structure. So we have this breaker structure here. Now if the market broke structure here, remember we're talking about one hour time frame, right? So if the market broke structure here, the market need to go back to at least equilibrium price or the premium price to continue the sell, right? So here my discounted fib, my discounted and premium fib, right, to the low right here, we see that within premium price there is a point of interest right here, right, which is this. So we have this point of interest. Let me highlight that. So we have that point of interest, right? Now this is where we want the market to actually go back to. Now if we are going to take a sell right here, we're on the 1 hour time frame, we need to see what the market is doing when it's going back to this 1 hour point of interest, so that we can know when the 1 hour time frame is actually turning into a downtrend, right? So we figured out the the 4-hour time frame when it's going to go into a downtrend, and now we are going to figure out when the 1-hour time frame is going into a downtrend. So in order to do that, we need to see what the 15-minute time frame is doing. So we go on the 15-minute time frame. So on the 15-minute time frame, what we need to see is we need to see the 15-minute in a downtrend, right? We need to see when the 15-minute breaks structure. So basically we see the 15-minute come into the POI right here that we had on the 1-hour time frame, right? Let's label the structures. So from here, market pushed, the market came all the way up here, so this is the new high. Market push here, market push here, then market basically come here, then market failed right here to create new highs and basically create an equal high, and then market broke structure. So right now from here to here we're in a downtrend on the 15 because we broke structure on the 15-minute time frame, right? Now that is one confluence, right? That is one way to find out where the market will turn at your point of interest, break a structure. That is one way. Note there's an order block here that we can refine on a lower time frame, but that is just one way how you can know where the market is going to turn. Now I taught you guys about divergence, I taught you guys a schematic, I thought you guys just lower time frame sauce, right, to know when the market is going to reverse, just moving in a trend or at a point of interest. So let's go to the 5-minute time frame now, right? What do we see on the 5-minute time frame? Let's remove these. What do we see on the 5-minute time frame, right? This is obvious. So right here we basically see a curve. Hold on, let me find that tool. Alright, so here we basically see a curve when price approaches our point of interest right here. So we basically seeing this curve. What this curve is basically showing is that the market is at a turning point, right? So if you look closer, you can see that there is a divergence here. And if I bring up my RSI, right? So from here, here, and here, you notice that the RSI is going down while the chart is basically going up. So this is basically telling you that the market wants to retrace here. Alright, so that is one way you can tell that the market is turning from your point of interest, or your point of interest is valid. Now, note a next thing that is precious to our trading style, the time, right? What time is it? So this is basically coming into London session. So the market is basically setting up for a big move. So over here where you get the entries, note it is now in London session, right? But we'll get to that. So we identify divergence, right? We identify the curve, we identify breaker structure. Now here the market is going up and we're looking for sell. So obviously this would be a distribution, because remember I told you guys that most of the time when you see divergence, a Wyckoff is present. It doesn't have to be perfect, because most time Wyckoff is not perfect like you see in the diagrams, right? But once you understand the logics, behind it, you can always find that divergence. You can always find that schematic, right? And as I said before, I don't really use it because it's basically divergence, and once I confirm my divergence, my breaker structure, and the different time frame correlations, then schematic is not necessary to me, right? But just for you guys' purpose, this would be your PSY right here, right? You have your buying climax here, you have your AR here, and basically the AR is basically what sets the range for the schematic, right? And then you have your MSO here, SOW, your minus sign of weakness, right? Because it basically tested the zone, the AR, right? So you basically break it and then go right back inside. So this is the minor sign of weakness. This is supposed to happen, right? Once there's a schematic. And then after this, you have your up thrust. So because right after we have this up thrust, right? Oh, I forgot the test. So you have your test here. So this is a distribution schematic basically. So and then over here you have the sign of weakness that broke structure. So now the market needs to go back to test, right? And remember, this is the 5-minute time frame. So I'm gonna point out another thing here, right? So there is no UTAD in this case, right? There is no UTAD because it did not break the upthrust. So there is no UTAD in this schematic. So this is a distribution schematic without a UTAD, right? But note we have this order block right here, right? Which we would basically use for our entries. So this would be where we're looking for the market to come back to test, right? And if we are not looking at schematic and we are looking at structure, I want to point out something, right? So note the 5-minute time frame is creating downtrend structures, right? So we have lower high, lower low, lower high, lower low, lower high, lower low, right? And then market broke that structure, right? But the fact that the market broke this structure, it doesn't mean that the market will retest to continue up and the downtrend failed. What it means is that the 5-minute structure is basically retesting a 15-minute premium structure, right? A 15-minute premium. So remember, on the 15-minute time frame, so from here to here was 15-minute structure, just like that. So if this is 15-minute structure and I use my premium and discounted fib, right, we can always get a test at premium, right? So the fact that it broke 5-minute structure means nothing, right? We are testing a 15-minute structure, not a 5-minute structure. So basically, to reach back to this level here on the 15-minute time frame, the 5-minute has to be in a trend, right? So the fact that it broke on the 5-minute time frame doesn't mean that the market is going in an uptrend. It was in an uptrend for like a few minutes, right? But you have to know where to get out, and that is how time frame correlation is important, right? So let's go back on the 5-minute time frame. So there's a lot of other ways we can look at this, right? So if we are on the 5-minute time frame, if we are taking different time frames into consideration, we know that this is 15-minute structure. So we know that on the 15-minute structure we have this point of interest here, and this is 15-minute premium price. So the market can always come back to premium price. However, on the 15-minute time frame, we see where market broke structure and push up. But if you are looking at liquidity also, this area is very liquidated. This area is liquidated, right? So the fact that this area is liquidated, market will want to take out this area, right? So this area is just the inducement on the 5-minute time frame, right? So the market induced here and then played this order block, collected the orders, and then market head to the downside. And if we want to refine this entry some more, right? If we want to refine this entry some more, we can go on the 1-minute time frame. So if I go on the 1-minute time frame, here Once market hit this PO high, I then look to see what the 1 minute time frame is doing. So I identify the 1 minute trend. Right? So to take an entry on the 1 minute time frame, I would have to wait for a breaker structure. So the market pushed down, basically created this, then push up, failed to create new highs, and then broke structure. So I identify this order block right here. Alright, let's use this tool. So if we should use this tool here to get this 50%, right, that would be our entry at 50% here, because that's an order block over there. Stop loss above, which would make this 1.8 pip stop loss, and then 1 hour time frame target, right? So on the 1 hour time frame, this is the obvious structure that I see, right? So this would be my take profit. Remember, we are in a uptrend on the 4 hour time frame, so this would be my target, right? So this is 28 pips, right? This is 28 pips. A lot of people are going to say like 28 pips, what? But look at the risk to reward ratio. That is 15% if you're risking 1% of your account, just because you have a minimal stop loss, right? So you have a 1.8 pip stop loss. Your target is 28. You're just in and out of that trade. You're done, right? With a 15%, right? What if your stop loss was 28 pips? Because I see a lot of stop losses 28 pips and more, right? You'd have to wait days, hours in the market to make this 15%, right? But we made 15% off 28 pips, right? So that is how I would approach the market here, right? But let's get back to the bigger picture, right? Remember, the 4 hour time frame is in an uptrend, right? So the bigger picture, we'd have to be looking for buys, because the higher time frame is in an uptrend. But where will the market basically create that higher low, right? If you look at this chart on the 1 hour time frame, remember, we have to be looking at 1 hour time frame to see what it is doing within this 4 hour zone, right? In order to trade the 4 hour time frame, we need to look on the 1 hour time frame to see the trend that the market is in, so we can know if the market is going to continue trending down or the market wants to reverse, right? So the market pushed down, right? And now we're basically within premium price, right? Discounted price, sorry. Look at this. So now we are basically in discounted price, and this is when we generally want to look for buys, right, in the discounted price region, right? So when I look at this chart, just like I showed you guys when I was about to take entry here, I see a curve, right? I see a curve, and what this means is that the market is basically transitioning into a different trend, right? So look at this. We're coming down, and then the market start to create a curve. So in most cases, there is Wyckoff present here, but I'm not going to even identify that Wyckoff because I don't need to. If you look at the chart, right, what you can see here is divergence, right? So look at this. So market going down, and divergence is showing that market is basically going up, right? So that is all you need to identify, divergence, right? And if I go on any time frame, 15-minute lower, it will still be there, right? So divergence showing that the market is going up, right? and the market is basically going down. So this is telling you that the market wants to retrace. Now we identified a possible reason why the market will want to retrace here. We already know that price is within discounted price, right? We already know that the 4-hour time frame is in an uptrend. So right here there's a lot of confluence that the market can turn here to create that higher low on the 4-hour time frame, right? So if we look at trend now, right, we're still trending down on the higher time, on the 1-hour time frame, right? So market is still creating these lower highs. So lower high, lower high, lower high, lower high, right? So what we want to see where structure is concerned is market to break to the upside on the 1-hour time frame, because the 1 hour is basically showing us the transition, right, for the 4-hour time frame. So here we realize that the market is still making lower highs and lower lows. Here we have lower low, lower low, and then market created a lower low here, right? Lower high, lower low, lower high, lower low, lower high, lower low. Now if you look closely here, the market basically failed to create a new high right here, a new low, sorry. Let's use red. So the market failed to create a new low, right? And then the market pushed to the upside, breaking this structure here, creating new highs. So from here on the 1-hour time frame to here, the market created new highs. Don't watch this structure on the 1-hour time frame because it didn't break here, right? So what the market created here was just liquidity. The market basically just created liquidity here. This didn't break, so this is just one impulsive move on the 1-hour time frame. So this is just a complex pullback within that 1-hour time frame, right? So this is where the breaker structure happened. So the fact that the market came back down here and broke this little structure right here, this is nothing, because this is not a structure on the 1-hour time frame. So if we were looking buys, we know that price need to come back in the discounted price. So here is discounted price, right? So we broke below 50, came in discounted price, and that is for the 1-hour time frame. So the fact that it broke here is nothing, right? This is just 15-minute structure or lower time frame structure, but on the 1 hour, this is just one impulsive move right here, right? So basically we broke structure. So now we know that the 1-hour time frame is in an uptrend again, right? So the fact that we know this, it means that this could be the possible area where the 4-hour time frame wants to go up. So now we basically identify this as 4-hour higher low. Right? So we identify this as 4-hour higher low. Now, if we identify this as 4-hour higher low, it means that from a 4-hour higher low, we need to create a new high, right? So my target, if I get an entry here, will be at this high, right? This is where I'd be looking to take profits, because from a higher low, we need to create a higher high in an uptrend, right? Now, let's look into entry opportunity, right? So the market created this new high, right, on the 1-hour time frame because we broke this lower high, right? And I use my discounted fib to see where price will retrace on the 1-hour time frame to get my entry. Now let's go on the 15-minute time frame to see what the 15-minute is doing within the 1 hour. Now, when I go on the 15-minute time frame, this is what I notice. So I see an order block right here that broke structure. Let's zoom in on this. So here we have this order block. This candle that is basically 3 times this candle here. So this is a valid order block right here. And I know I can go down on a lower time frame. I know I can be on a lower time frame to basically get keener entries, right? But once your stop loss is 5 pips and less, if you see it on a 15-minute or a 5 minutes time frame, then there is no need for a lower time frame refinement, right? So here, extend below, we have a 3.8 pip stop. So a 3.8 pip stop is good. We don't need to refine this, right? So what market did was induce this structure here, because remember, this is 1 hour time frame, and this is what we're looking for, the retracement on the 1 hour time frame. We're just using a lower time frame for entries, but this is discounted price, and market can break this structure without going into a downtrend, because this is just 15-minute structure and the bigger time frame is in an uptrend, right? However, here we have 2 entries, so we have another entry down here, but this is the extreme entry and this is the decisional entry, right? So basically, if you're risking say 2%, then you risk 1% here and 1% here, just in case the market choose to go to the extreme entry, right? So again, if I got my entry here, extend it, I would be targeting the highest high right here, 4-hour highs, because this is 4-hour higher low, right? But I would be taking partials at this 1-hour low high. So all of this area to me is viewed as liquidity. So once I break above this area, my next target is 1 hour lower high, right, to take partials. So I probably close 50% here, stop loss at break even, and then I would be looking for the overall move to go to the 4 hour higher high, right? So yeah guys, so this is the confluence I look for on my trades, right, when taking entries and stuff like that. So I incorporate everything: divergence, because I need to know when the trend is changing. Structure is key. All day, every day, structure is key, right? So you can just use raw price action to trade the forex market once you understand structure and understand the correlation between the different time frames, right? And then entry, all you need to look for on entry is basically order block inefficiency and lower time frame discounted and premium price, like on the 1 minute time frame, so that you can have those minimal stop losses, right? So yeah guys, that's basically it for this section of the course.